Hey everybody, Matty here with Altcoin Buzz. It is Saturday, it is the weekend. Hope you're having a great one so far. We're taking a look at Bitcoin today. According to one analyst, that project's 896-day accumulation will now spark a $100,000 bull run. Always just one person's opinion, but still worth covering. That's on Cointelegraph.com. We'll also take a look at 3 recent catalysts for Bitcoin that will eventually help it reach that 100K milestone. More and more young people are starting to look at Bitcoin as a replacement for gold, and in fact, according to a survey, millennials are more pro-Bitcoin now than in 2017. We will take a look at those stories. We'd also like to give a shout out to our new partner, Ngrave. They've just launched a hardware wallet and an Indiegogo campaign for that new wallet, the Ngrave Zero. You guys can check it out at ngrave.io. Link will be in the description. Okay, let's first take a look at the market today before we kick things off. We're on CoinGecko.com right here. Things are up overall 2.5% on the whole, $269.3 billion total. Bitcoin still struggling. Well, I shouldn't say struggling, but it's still working its way up to that 10K point of resistance, currently sitting at $9,524. That is up 1% in the day. The real breakout here among kind of the top 10 or so is Ethereum, though. That is the story of the hour. It is up 7% in these last 24 hours, $235.34. Also some notable gains I should mention from Litecoin. That is up 4.6% in the last day, currently at $46.65. Bitcoin dominance 65% flat. Okay, here now on Cointelegraph.com, Bitcoin 896-day so-called accumulation will now spark a 100K bull run. That's according to one analyst. A giant repositioning since December of 2017, when at that time we saw the all-time high, is about to come to a close. That's according to Positive Crypto, leading to new price all-time highs. So according to a chart, that time since December 2017 has been, quote, one massive accumulation phase during which investors repositioned themselves and bought in. And this so-called consolidation structure, as Positive Crypto calls it, is now ripe for disintegration to give way to a new bull run which will obliterate the 20K high. He wrote, quote, the last 896 days were simply one massive reaccumulation phase before the run to 100K and beyond. Hashtag Bitcoin and the consolidation structure will soon be broken. Are you prepared? And as you can see here, despite wobbling around the halving and after, the Bitcoin price has actually entirely erased all of those losses that we experienced in the first couple of weeks of March, so specifically on Black Thursday and Friday the 13th. As we covered yesterday, Bitcoin heading into there was in the high 7,000s. Well, now as we just saw, we're in the mid 9,000s. So even if you did lose a ton on your investments during those March crashes, if you just held on, you'd actually be up somewhere in the neighborhood of about 25% since that time. So is 100K possible? Well, many people are saying that after this month's halving, it's going to be a bit of a slow burn, but we'll get there. We'll be in position in the next 1 or 2 years at most. That's according to many. And perhaps most daringly, Plan B's stock to flow model predicts a 288,000 price tag by 2024. We've covered that, with all-time highs easily being 2 times that, $576,000 per Bitcoin. Now, these are all just opinions, whether it's Positive Crypto, whether it's Plan B. They're individuals with their own opinions and likely their own agendas as well. Don't forget, they're probably incentivized to kind of suggest something that looks like it's viewed through rose-colored glasses. They have their own incentives and their own motivations. That's all I'm going to say. However, for the time being, there are 3 key catalysts that we can point to definitively and specifically that will be good for Bitcoin, at least in the long run, here on seekingalpha.com. One of the first catalysts that we're going to examine here is an important one. It involves Square, which has made recurring Bitcoin purchases available to its Cash App customers. So Square's CEO, Jack Dorsey, has been a well-known proponent of Bitcoin for years. Of course, he's talked about it really quite a bit online in podcasts and whatnot. So he joined actions to his words when in 2018 he allowed Bitcoin buying and selling to all users of the Cash App. And in a recent interview, he praised the Bitcoin white paper published in 2008 by Satoshi Nakamoto, describing it as, quote, poetry and one of the most seminal works of computer science in the last 20 to 30 years. So a few days ago, he renewed his faith in the digital currency by unveiling a new Bitcoin automatic purchase feature. And as you can see here, he's been tweeting about this. He's not shy about his opinions on Twitter, that's for sure. So that's one catalyst, this partnership seemingly more and more that Bitcoin has with Square, and perhaps more importantly with Jack Dorsey, who's a major cheerleader and really somebody that's in our corner when it comes to being in this space. The second main catalyst involves Shopify, which renewed their partnership with Coin Payments, which is the largest cryptocurrency payment processor. So on the 20th of May, Shopify, which is a Canadian multinational e-commerce, announced a partnership with Coin Payments, and the two parties were previously running a beta trial, which was completed successfully. The partnership will allow Shopify over 1 million merchants to receive payments in digital currencies, and the benefits highlighted were a reduction in transaction fees and faster payments. While currently the volumes generated by these transactions shouldn't be very high, the successful beta trial shows that digital currencies offer concrete benefits to businesses and confirm the maturity of the technology supporting these transactions. And I think most importantly, this second catalyst points to a real brick that we're laying in the foundation when it comes to adoption. This is very much what the path to adoption looks like, at least in my opinion. Finally, guys, the third catalyst involves renewed interest and skepticism by institutions such as JP Morgan, which are now offering banking services to crypto exchanges, and Goldman Sachs is also in the picture here. So JP Morgan is now offering banking services to cryptocurrency exchanges, which is, in my opinion, is the height of hypocrisy, but I digress. This follows Paul Tudor Jones's interest in Bitcoin and confirms that institutions are slowly starting to accept Bitcoin and digital currencies as plausible assets as a hedge against the government-induced inflation, which you can read more about pretty much everywhere, not only here, but everywhere, and as a better way to transact money. So on the one hand, we have a catalyst above in the form of Shopify that was more consumer-focused, and here we have something that's much more institutional-focused. JP Morgan extending their services. Good news all around. And here now is an interesting piece as far as it relates to our last survey story that we'll look at in just a moment. We're on Inbez.com. Bitcoin to replace gold due to young people's interest. So Bitcoin could very well replace gold according to many in the future. And that's also according to an analysis firm's CEO, Mike Alfred. Alfred says that Bitcoin transactions will grow as young people are more interested in it. And as we just saw, we really examined 3 different examples and catalysts as to why that will likely very much be the case. And finally, many who were against Bitcoin in the past are starting to come around and starting to change their mind. Mr. Alfred, who is the CEO of the analytics firm, stated, quote, "I see Bitcoin replacing gold as the hardest money for savers with long time horizons. Young people are far more interested in Bitcoin in a world where the economy becomes increasingly online and virtual." That's a very important observation. You guys can read a little bit here more about the exposition, but it's basically suggesting that Bitcoin, to use an analogy, has been swimming upstream, and it's proven itself really for 10 years now, always facing obstacles, always facing adversity, and always overcoming in the long run. There's always been, any snapshot, any year that you look at, it's always been a difficult up and down. There's always been a lot of volatility, but in a lot of ways, over the long term, over the 10-year horizon and history that we have to look at, it's made for something that's robust and hardy as an asset, and you can't really say the same of anything else. So take a look at this in full, guys. We'll link to it in the description below, but I think that segues us sufficiently into this piece here, which is the final one we're going to look at on Finder.com. According to a survey, millennials are more pro-Bitcoin now than in 2017. So this information comes to us by a large-scale survey carried out by The Tokenist. It featured over 5,000 respondents from 24 countries, importantly, and it aimed to take the world's temperature on everything Bitcoin. It compares the findings from this year's survey to an aggregate of 3 surveys from 2017 for a sense of how the world's attitudes toward Bitcoin have changed over these last 3 years. Well, on the whole, Bitcoin is somewhat hotter than it was in 2017. Don't forget, many people didn't really know what it was at that time, but 3 years worth of media FUD and coverage, whether positive or negative, have made it more of a household talking point. Importantly, Bitcoin is much bigger among millennials than ages 65 plus, which we'll call boomers for the sake of readability, and bigger among males than females, which we'll respectively call dudes and dudettes for the sake of amusement, sure. An important finding was that the biggest difference between Bitcoin and other asset classes was found between Bitcoin and government bonds. So in 2017, only 18% of respondents overall would have preferred Bitcoin over bonds. In 2020, the number goes all the way up to 38%. That is 38%, not 18, would prefer Bitcoin over government bonds. They've probably seen some of the price extrapolations, and maybe they thought Bitcoin would go to zero, and all of a sudden, it's still hanging around. It's still doing okay. In both years, there was a vast difference between how millennials and boomers answered the question. Again, there is a much stronger appreciation for Bitcoin in dudes versus dudettes, and overall, we can reasonably assume that at least some of the survey results are the result of varying risk appetites among different ages and genders. That is a fair point. This is hinted at by the changing preferences for stocks versus Bitcoin. So compared to 2017, boomers are also less likely to take Bitcoin over stocks today, while millennials would be more likely to take stocks over Bitcoin these days. Interesting. So while stock markets experienced even more volatility than crypto as of late, it's perhaps unsurprising. And here we have some metrics, as you can see, that we're comparing. This particular intersection point I find very interesting. So male millennials, 43%, it's the highest number that we have, prefer $1,000 of Bitcoin over $1,000 of government bonds. That's the baseline survey. Those are the metrics from the baseline survey. The new results suggest that male millennials really represent the highest interest in Bitcoin, insofar that 56% prefer $1,000 of Bitcoin over $1,000 of government bonds. I am male. I am a millennial. I'm a bit of an old millennial, but I fit in there nonetheless. So this is my category, and I feel like I'm helping to boost that number up because I speak to people, that are similar to myself, and this is very much the sentiment. I would vastly prefer $1,000 worth of Bitcoin than stocks, than real estate, and gold for sure. So I can see why this is probably the biggest number, and it's nice to see that it's grown over some of those baseline metrics that they collected earlier. Some other massive shifts were highlighted in the survey, and they included the plunging trust in banks, perhaps rightfully so, with 47% of respondents now saying they trust Bitcoin over big banks, an increase of 29% compared to 3 years ago. Again, 47% of respondents now saying they trust Bitcoin more than the big banks. And that's a number that was only 18% 3 years ago. Less than a quarter of millennials think Bitcoin is a bubble. And that's important because that basically summarizes the collective psychology. So if 3/4 think it's legit, then, it's almost like a self-fulfilling prophecy. It is something that becomes legitimate. But while over half of over 65s do feel that is a bubble. Increasingly, however, that is a generation that, although is very important right now financially, is going to be less so in the future, let's be honest. But perhaps more tellingly, the number one thing most respondents of any kind would do if they were given Bitcoin is immediately sell it. That's interesting. I can't quite relate to that personally, but that's interesting. Let us know your thoughts about that, guys. Let us know if you're one of these either male or female millennials or somebody else. Maybe you're 65 plus. Maybe you have a view that's in line with the general group here, the demographic. Maybe you're a maverick and you do your own thing. You think for yourself. Let us know what you think about these survey results. I think they bode well for the future of Bitcoin and the future of this space. But that about wraps it up for today, everybody. Do be sure you're following us on all the regular social media channels and keep checking into our website, altcoinbuzz.io, for all the latest. Go ahead, like, subscribe, share, and hit the bell, of course, to receive notifications if you've enjoyed today's video. Best of luck, guys, if you choose to invest on this Saturday. Have a great weekend, everybody. And as always, we do hope to see you again soon in our next video. Take care.